Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Couple of things that I need to address, guys. I know some of you guys probably been a little bit frustrated with my YouTube, the scheduling of my YouTube video, guys. I usually do it majority of the time after the market, but lately I've been doing some pre-market. Okay, guys, I'm doing my best for free to get you guys content, okay, in hopes that I can assist you. All right, a lot of time Uncle Charles does get busy after the market. All right, after the market closes, sometimes there be times I have to deal with some real life stuff that prevents me from being able to make a video. All right, but I figured instead of doing nothing, I should do something. So in the morning, I drop a pre-market video in hopes that I could bring value to you guys, because I figured in my mind I wasn't able to drop a video the previous night. I should drop something at least to help out, to show that I care. If I did not care, I would not make a video at all. Okay, I wouldn't make a video at all. But I do care. That's why I go out of my way. I put in the effort to give you guys a pre-market video when I'm unable to give you guys an aftermarket video. Time to get to the charts. It's time to get down to business, okay? We had a couple of breakdowns these last few weeks, okay? We had that big chop back in August, the big breakdown in early September, all right? From 555, that led to a beautiful move all the way down to 540-ish, probably a little lower, okay? $15 move to the downside. Beautiful. That also led to a breakdown of the 50 daily moving average. However, from that same buy zone from last Wednesday, bulls were able to rally, recapturing the 50 daily moving average. That is the false breakdown setup. Just like we don't call tops unless we get a false breakout setup like this one we had right here, September 3rd. We don't want to call bottoms unless we get a false breakdown setup. So we broke down the 50, recaptured the 50, and that led from recapturing the 50 all the way up, was at 550-ish, 549-ish, all the way up to 563-ish. $14 move to the upside. Mind you, if you was trading intraday and had Uncle's levels, you should have been able to catch some recaptures, some false breakdown setups from the lower levels as well. There was no crystal balls, no feelings involved, just us trading the setups, all right? But as of right now, the market has rallied I'm talking about since September 6th, higher closes 1, 2, 3, 4, 5 days in a row, okay? Is it time for the market to consolidate a bit? Big possibility. The answer is yes. Also, I'm going to get it right this time, guys. FOMC is this week, September 18th. Last time I had the date all wrong. I was looking at the wrong date, but I'm looking at the right one this time, September 18th, FOMC. I'm hoping it's not the case, but based on the chart, it is a possibility that we get some chop heading into FOMC, maybe. But we'll see. We just got to pay attention to the levels like I always say. And right now I have the level at 562 and 560. If it's pullback time for the SPY, then 562 and 560 must fail, and we should get a pullback, possibly all the way back to retest 555. Okay, we have other levels before 555, like 558.5, 557. But I'm favoring a back test of 555 and a slight possibility of 553.4. The reason is, like I said, multiple days of up days. It probably needs to breather a little bit. And yes, we did recapture those two critical levels. So a back test wouldn't be too far out the question, and it wouldn't surprise me too much. But if it did back test, bulls would definitely need to defend to try to put in a higher low and get us to a new all-time highs. And that scenario is only possible. This is the most important part. That scenario is only possible if support fails, starting with 562 and 560. Now, if we do get the breakdown of 555 and 553.4, that would be very, very bearish. Okay, could be some double top, triple top scenario there. Could be an M pattern playing out. Okay, not a prediction, but definitely a good sign of an M pattern playing out would be the loss of those critical levels that we recently recaptured. All right, and of course, the bull case scenario is that we continue to close higher. Next resistance at 563.5-ish and 565. We clear those levels, then new all-time highs incoming for the SPY. All right, guys, remember, we don't trade with feelings. This is if statements. We trade based on logic. If you have to program a computer or a robot or something, you would give it logic by giving it if statements. All right, so one more time, bear case scenario, we break down 562 and 560 to retest 555, lowest 553.4. But below those levels I would be bear bias. I don't think the next test of the 50 DMA will hold. I think it would break, and we definitely would head down a lot lower. All right, but as long as above 555 and 553.4 lowest, I'm overall bullish. We may need to consolidate a little bit, but if we clear 563 and 565, I'm not going to argue with the price action. More upside is possible. So right now, as of right now, it is looking bullish. Triple Q, while Triple Q is looking bullish, we need to look at the context. We had a down trend line here, and Triple Q ran right into it for the third time. For there to be a breakout, 476 must clear. And if it does, that would be very bullish. More upside will be possible up to 480, 42.5 or higher. Possibly send us back up to 486s. All right. For me to trust this rejection, we either need a gap down or a breakdown of support starting with 472.7, 471, and 469. If we break down those levels or gap below those levels, it's likely bearish. It's likely we're going to get some selling pressure, stronger selling pressure to the downside. All right. NVDA, we have an inside candle setup. The preceding candle's range is 115.38 all the way up to 120.8. All right. I do have a resistance level around 121-ish. But yeah, we clear that level, bullish. All right. Right now it's around 119. But if we can clear the preceding candle's high, which is around 120.8, we can round it to 121 if you guys want. Clear those levels, I would be bullish on NVDA. Don't argue with the price action. 122, 123.5, and fib level 125 would be in play. For me to get bearish, support must fail. All right, support must fail. I got it at 118 and 116. If those levels fail, definitely pullback time. I would definitely be bearish. Bear buys below 116. All right. Tesla, interesting. Okay, we did get the breakout. Multiple tests of this downtrend line. Okay, about one test, two tests, three tests on the 12th, and then yesterday we got a slight breakout. That's a questionable breakout, but it's a breakout nonetheless. Okay, if you're holding position, if you're holding calls, I would say this. If Tesla can stay above 230, I would keep holding my calls if you have time on it. If you have time. If you don't, then you need to figure out how to get the hell out. But if you have time on it, I will hold it a little longer above 230 to see if it can go up to hit the next target at 232, 233.5, 235, and the fib level at 237. All right. If it's struggling to clear 230 and it starts breaking down support, starting with the support at 228 and the fib level at 226.5, I would definitely cut my loss, look to short. Okay, below 226.5, I would definitely look to short. I would be bearish with 225, 223.5 in play, possibly all the way back down to 220 and 216 zone. All right. If you got, let me tell you guys, all right, you don't have to be right all the time. You only need 51% accuracy with good trading, good risk management. So if you are wrong and you know it's not going your way, don't hold on and hope. Be strategic, be tactical about it, be professional about it, be cold-hearted about it. Get your emotions out of it. Cut loss if you need to. But like I said, if it stays above 230, because some of you guys might have longed the breakout. If your setup is still intact, if it's still in play, keep holding. If you got time on your contract. If not, get the heck out. No hard feelings. Remember, this is a business. We can't get our feelings into it. We got to let it go. We got to practice. Okay, we got to practice getting better at risk management. Okay, without good risk management, you will never be able to become a profitable trader. You have to be good at being a loser. You have to be good at being a loser. If you're not good at being a loser, you won't be good at being a winner. Okay, that's the word from Uncle. All right, but yeah, that's the plan. Above 230 is bullish, and we can possibly head up higher. I would target 237 though, 235 to 237 zone. But like I said, if we don't clear 230 and start breaking out 228, 226.5, look to short. That's bearish, or cut your loss. IWM. Now this one did get a breakout. Okay, this one did get a breakout of the downtrend line. We had multiple tests of the downtrend line, got the breakout. For there to be bullish follow through, IWM needs to clear the next resistance level at 217, 220, and 221.8. If it can clear those levels, definitely more upside is in play. I'm going to stay bull bias as long as above 215.5. All right. If we do break down 215.5, then guess what, guys? False breakout. All right. It's a false breakout. That's the trigger for puts. If we do break down 215.5, 214, 212.6 would be in play, and the gap fill all the way down at 211.6s. All right. Guys, know the levels, know the setups. It's not just for entry, but it's also for exit, guys. It's also for risk management. All right, just keep that in mind. Now, here is the dark pool levels for SPY. Okay, 50% of activity came in at 558.9. This is from Friday, Friday 13th, from Friday. And the other came in at right here at 561.93. I'd round that to the 562 level because I got a resistant level there. But 558.9. as well as 561.93. Triple Q. This is where the big money's moving their what the heck just happened? This is where big money's moving their money around these areas, guys. So it's good to know where they're parking their money, where they're making their transactions and stuff. 52% of activity for Triple Q, 475.41, and 34% came in at 473.19. Now 475.4, that's less than a billion, only 151 million. For indices, that's not really a lot. And then 473, 97.4 million. So when I see that the premiums are low like this, that tells me that volatility might be decreasing a little bit. Okay, and it's not really good for trading, but that's just something to help us prepare. Okay. Yeah, 253.6 million premium around the 211.5-ish level. I do have a support around that area too. Tesla, 230.29. I do have a big resistance level at 230, but you can add this level as a dark pool level. I would be bullish above that level. If we're below it, it's going to be questionable, okay? But you guys know the levels, so you know when to be bullish, you know when to be bearish. You know when to keep holding, you know when to fold it. All right, that's important as well, guys. NVDA, 119 is where majority of the activity came in. 119.14, and the other one was 119.25, but it's around the same zone, same area. That's a lot of money, all right? Now, let's get to the option flow. Yeah, definitely, guys, give this video a like if you guys like the content. If you guys like the option flow, the chart analysis, unbiased, sheep style. So this is how I filter it out for the new viewers. I look at 100K premiums or above because I want to look at the big money. All right. I look at all expiration dates. I only look at above the ask because I'm looking for big money and aggressive. People that are aggressive with their entries. And I want sweep orders and I want out the money. These are the most aggressive plays for SPY. And heading into next week, these all came from last Friday, guys. This is all from last week as far as when they bought. This came from last Friday. And it's bearish. The end of the week bearish. $8.1 million compared to in puts, compared to 238,000 into calls. That is super lopsided. However, today's date is September 15th as of when I'm recording this. We got to look at the context because a lot of these contracts may have expired last week or tomorrow. So we have this put right here, September 16th, 558 strike price. Okay, that could still be something worth looking at. Now this September 13th, we don't look at that. September 13th. A lot of September 13s, we're not going to count any of those. Now, we take out the September 13th, it's still overall bearish, as you guys can see. The big money has been loading up. They've been loading up on the, while SPY has been going up, big money has been loading up on these bearish positions. As you guys can see, November 15th, 533 strike price. This is $1.2 million in premium, chat. They entered around 561.64, but that's super aggressive for November 15th. All right, you see another one September. Okay, so that's September 13th. There's another one, October 18th, 540 strike price. $1.1 million in premium. That's a lot. Let's take a look at the other aggressive one. This one's $1.8 million in premium, November 15th. This is $1.7 million in premium, November 15th, for 533 strike price. We are seeing with our own eyes, our own two eyes, where the big money is putting their money in. Now, here's the thing. Here's what we got to think about. For these guys to buy puts, somebody had to have sold it to them. All right? That's what you got to, that's the problem. We don't know the reasons for these purchases. We don't know the reasons for these sells. But you got to keep that in mind. You see these big kinds of people buying puts, but keep in mind, someone's on the other side willing to sell it to them. All right? This is why we got to combine it with the price action. So if the flows are saying it's bearish, right? We got to combine it with the price action, knowing the levels. Okay, if flows are saying it's bearish, price action needs to confirm by breaking down 562, breaking down 560, breaking down 555 for sure, and 553.4. So if you see the flows bearish and price action starts reflecting that by breaking down the levels Uncle give you, guess what? We're going to enter puts. And seeing the data, seeing the big money also going short, would just add to my conviction. This is why I love the flows. So while I'm seeing big money entering, because big money might not care about the entry, right? Because they know stuff that we don't know. They might not care about entry, right? They're just entering it because they know they might know there's a bigger move coming, right? So they don't care about entry. But for me, I do, because I'm a price action guy. I want to get in the best entry I can. So while I'm being wary of being bullish, because hey, price action is bullish, but I gotta be careful because look what big money's doing. It's telling me to be careful being bullish, keeping me balanced. And then once the price action starts reflecting bearishness, it's gonna make me a little more comfortable going short, getting bearish. Why? Because I also know that big money are also buying puts. I'll be a lot more comfortable buying puts when the price action say to buy puts, because I also know big money has been doing the same. That's why I'm giving you guys this information, right? All right, let's move on to triple Q. All right, same filters for triple Q. You guys can see it is also bearish. 3.1 million compared to 1.1 million, all right? But where's the September 13? One September 13, another 1, 2, 3, 4, 5. So most of the September 13 are puts. But so we got to look at the other ones, right? September 20th, that's a week out. 470 strike price, bearish. This one's still very bearish. So once again, that November 15th date, 450 strike price, okay? Now, we do have an aggressive call. October 18th, 485, over 500K. That is a lot. So from there, we got to look at it. Well, who's winning? What's the majority doing? Well, the majority is buying puts. Well, we got this one person right here, whoever they are, buying calls. So from there, we got to look at, well, around where did they enter? We got the spot. They enter around 475.29. So that gives us an idea of what they really need. Like they entered around there. They got their strike price. They got time on it. You know they need You know they need for triple Q to get above that level. All right. You know they needed to get above. Otherwise, they're going to lose too much money. Right. So it's good to see, even if they're buying calls, it's good to see where they're entering. Right, because we're price action traders. But majority, once again, is still into puts. So the edge goes to puts, even though somebody is buying calls. IWM. Now this right here, look at this. Crazy. Now, the con is not as much. 910K compared to 232K. Not as much money, but it's definitely lopsided in favor of the bulls. You see the price action on the charts. It's bullish. It's bullish, and the flows as far as the most aggressive. And you guys can see here, October 18, 220 strike price. September 20, 220 strike price. This is the only one bears. A 210 strike price for December 20th. Could that have been hedged because of how far out the date it is? Right? But September 20, 218, October 4th, 217. Overall, it's looking bullish. But here's the thing. It's not too out the money. All right, I'd like to see $15, $30 out the money. We did see it with SPY. We see it with Triple Q. Not really seeing it with IWM, but is overall in favor of calls for what it's worth. Okay, Tesla. Nothing for Tesla. Wow. NVDA. Okay, NVDA overall bullish as well. 1.3 mil compared to 370K. So we look at the calls. Most of the calls here are for September 20th. We got one put for September 13th and one call for September 13th. But the rest is mostly for September 20th, and the majority is calls, guys. Majority is calls. Looking at here, maybe we like I said, if it says calls in the flows, we need the price action to confirm. We need a breakout of 121. All right, breakout 121. All right, guys. So I hope you guys enjoyed today's video. If you did, please hit the like button. And I apologize, I haven't been consistent with making videos in the aftermarket. I'm doing the best I can to get you guys the content. All right, and I definitely do appreciate you guys' time. All right, see you guys on the next one. Hopefully, peace.